Every time I go through a drive-through, they're like, "Yes, ma'am," and I'm like, I pull around and they're like, "Oh, hey, buddy," and I'm like, "I'm almost 30, but whatever." So
Hey,
it's
partner,
good.
what are you doing there?
Yeah, hey, I'll have a double cheese.
I've never had that happen, but
Every time. And when I call in, I called in a pizza order not too terribly long ago. And they were like, "Yes, ma'am, we'll have it ready in 20 minutes. So I gradually lowered my voice throughout the call. And I was like, "All right, I'll be there in 25. Maybe I'm on 385. And I think it just got awkward by the end of the call. So,
they're very confused, I think.
yeah.
Which, speaking of confusion, that's what we'll be talking about in the stock market, investing,
Right.
and how you can succeed, or at least start doing it. Welcome to the Chattervast podcast, and I'm your host, Chad, of course, and this is my friend, Chris.
How we all doing?
Yeah, we've been friends for several years now.
It feels like we just met, and it feels like we've known each other forever. It's a very strange dichotomy, I found.
Yeah, we have that, we click, and so we enjoy hanging out, doing things.
Not afraid to talk about tough things, not afraid to peel stuff back and see how it works, why it works, and, finance is no different. So.
Yeah, and occasionally blow something up. So That's beside the point of this conversation. So we're talking about stocks today and investing in general. And for myself, I know that I feel this, and that's why I asked you to come talk about this.
I'd love to.
And I know a lot of other people, you're really invested, pun intended.
I enjoy it. As always, we have to say on these things, I am not a licensed financial advisor, so this is not necessarily professional investment advice. We're just doing this for fun and entertainment. But yeah, Chad and I enjoy talking about these types of things, and I think there's a lot of miscommunication and confusion that comes, and I'm just hoping to bring some clarity, to your viewers, you as well, and, what you can do for yourself in the stock market without taking on an unnecessary amount of risk. So, yeah.
I think that's a good place to start with investing is what is investing as far as when we come to the stock market. What are we doing here?
Before you even talk about the stock market, I think just knowing a preliminary glimpse of investing in anything. And very simply put, an investment is when you take something little now and put it aside that costs you, hoping to get something much bigger later in your life. Take, for instance, a marathon. These guys, they don't just get up and go run one and win on race day. There's daily activity and discipline that goes into where they put in the miles, they put in the stretching, they put in the cardiovascular endurance training. And then come race day, when they finish, whether you get first place or 13th place, you finished and you're proud of that. Financial investment is not so different. You're simply taking some money now that may not be a lot, and you're putting it somewhere where you believe it's going to work harder. And somewhere down the road when you need it, it's going to be worth more. Kevin O'Leary from Shark Tank, Mr. Wonderful, he alludes to this as sending soldiers into war, not to get slaughtered, but to capture more soldiers and bring them back to a larger, more powerful, and more effective army. So that's how I view investing is it's taking something small, setting it aside and putting it somewhere where it works for me and produces, so when I need it later, there's more there.
Yeah, I think that's a great explanation of it. And you can apply that whether or not you're investing in a business,
right?
Personally, self-employment, you're investing a lot of time, usually, in that, sometimes money, but also in other people's businesses, which is what I think most people want to do when it comes to investing, like Kevin O'Leary. Let somebody else do the nitty-gritty, and I'll give you the capital and the funds for it, and you take it and run.
Right. And you don't have to be a Mr. Wonderful or a Mark Cuban to do this. And that's what I think a lot of people think. And we can get more into that. But, with the resources we have today, a simple guy like me and like you and, the people we know, they can invest their money and be successful financially over the long haul.
Yeah, exactly. There's lots of technology out there to make many things simple. And with that comes investing. You bring a lot of new people into the market. And hopefully we can bring a lot of intelligent people to the market. Yeah,
that's been a struggle, but there's some great guys out there, and in the YouTube community specifically, if you don't get too overwhelmed, there's plenty of great guys that talk regularly about finance and give really good direction on, where you can put your money without putting it in excessive risk.
Yeah, exactly. And that's, I think, a big point when it comes to investing is the difference in the risk ratio, how far you go down that. And you have to be, like we stated at the beginning, we're not investment professionals. So when you go and look at other people on YouTube or on podcast apps and you listen to their advice, you're going to have variance in what risk they're willing to take on and what they're willing to tell you as far as like risk that you should be taking.
Right. And once again, if you start following too many people, that's where it just gets confusing. So I'm here today to help simplify. Hey, find a couple of people that you can follow that seem to give sound advice and do a little bit of your own research, but you don't necessarily have to have a finance degree to be successful investing your money.
Exactly. So when it comes to investing, there's probably like a few words that I know that you think are very important for people to understand going into it.
Oh man, there are dozens and actually hundreds of words that are affiliated with the stock market and with investing. And if you go down that rabbit hole, we could sit here and talk for 2 hours just about terminology. And certain people with an ego might want to flex and use a lot of complex words, but that's not going to help people that are like, hey, I'm just a guy looking to get into the stock market and to start investing my money. I don't necessarily need to know every single term that's associated with it, but there's definitely a few things you'll want to know getting into it. So I would start simply by saying a stock or a share is just a small piece of a company that you or I can own. You can purchase stock from publicly traded companies, and you are now literally a small owner of that company. That's why I tell people don't get too concerned when the stock price goes up or down, or, should I sell, because I'm losing money or because I'm up money. You don't want to necessarily view it like that. You want to view it long haul. You own this company. If you owned a McDonald's, you wouldn't just sell your McDonald's off because you had one bad lunch rush where you didn't sell as many burgers. You wouldn't just close the doors. You'd hang out and have a better day the next day. When you buy a share or a piece of stock, I tell people, if you're an investor, not a trader, you want to hold that as long as you possibly can or for when you need it, because the likelihood that it's going to go up if it was a solid investment over time versus just the next couple weeks is very, likely. Another term you should know is simply capital. Capital is a fancy word for money. So if people say, how much capital do you have, and it's $10,000, they're just asking how much money is available to invest or how much money is invested. And then principal. Principal is how much money you initially start with. If I put $500 into any given stock and it goes up or appreciates up to $800, I've made $300 on paper, but my principal investment is $500. So those are a couple. You're going to hear a lot about diversification. That just simply means you need to have your money in multiple segments of the market. You don't want to be necessarily all invested in one stock. Now, if you have a really high risk tolerance and that's what you want to do, I can't tell you what to do with your money, but if you want to be a little bit in technology, a little bit in healthcare, a little bit in consumer non-cyclicals like toothpaste and grocery stores and that type of thing, diversification, those are going to be some common words you're going to hear a good bit, and they're good ones to know starting out. And we could go on, but I think that would give people a good starting point of where to look at.
Yeah, exactly. And I think when you come to any website or app that you're going to use to invest, they're going to have plenty of information on there explaining other terminology, but these ones are best.
The Ameritrade, they've got Ted, and he's like this little guy that pops out, and you can ask Ted. So you can type him any question, and he'll take you to different articles and that type of thing. Of course, I don't know if you remember the E-Trade babies. They use them in their advertisement, but E-Trade has, different investment tools and, calculators and video series. And so much of this stuff is free, Chad. I mean, you don't have to pay to get this information, and that's a wonderful thing about the era we live in. But, it's not that hard to get access to this type of stuff.
Exactly. And I was telling somebody the other day, I kind of wish I was born a little bit later, because I look at people in our generation and in younger people, they have access to so many tools, financial knowledge, and understanding of what's worth doing, and probably would have changed how I did when I was younger, college, shortly after.
Yeah, you might have been popping Tide Pods too, though. So,
that's true.
Yeah,
there's that segment.
You got to weigh it out. Where would you have been?
Yeah, exactly. Well, so now since we know some of the working knowledge here, as far as what a stock is, some of the words around it, what are reasons to invest? Why should somebody do this? Oh, man.
Chad, it's going to be personal to each individual. Everybody's going to have a different reason to set aside money. I would say one of the biggest ones, especially this seems to ring with the millennial generation, is, do you want to work forever at a 9-to-5 job? Or do you want to be able to create enough passive income or income that is coming into your bank account without you exchanging hours for dollars would you like some freedom? And that's ultimately what I believe finance should be more about, is how can we develop freedom? Accumulating money for the sake of doing it is never going to lead to any sort of happiness. There always has to be a bigger picture. And when you can pursue your personal goals of, say you want to help advance a good cause, you can do that if you have more money coming in and less time that you have to give to a 9-to-5 boss. If you want to save for your kids' education, that's a great reason to start investing, because college is becoming somewhat less popular, but it's still very valuable. If you have a child that says, hey, I want to be a lawyer or I want to be a doctor, they're going to need a degree to do that. And as a parent, you can lovingly set aside money and invest it and help it grow. And when it comes to that point, you can help them start that journey. If you want to do something nice, go on a trip with your wife or your family, buy a nice car. Those are reasons to invest your money, so when that time comes and you need that, you have it available for you. So, for me personally, my wife and I, we do love to try to help people out when we can. If you invest money, there's going to be more to give. We also love to travel, and there's things we like to do. And we've been able to take some wonderful trips. We've been able to go out west and see things. And a lot of this is because we had money set aside from years previous that had grown. And now we were able to do some of these things that otherwise, just wouldn't have been in the cards, because there wouldn't have been the funds available.
Yeah. I think what we're going to see here with both reasons and some reasons why to invest, but also why people don't invest, is our society struggles greatly with consumerism and instant gratification, and that's difficult. So you can think of investing, at least from my perspective, that you can put in with your job a lot more work and time and effort into, like you said, to escape a 9-to-5 and have some freedom. You can put a lot more into it at the beginning, I think, and have some of that to offset some of your working hours earlier than, because I think in our generation, I hear plenty of people are like, wow, 65 is a really long ways away, and to be having to do the same thing I'm doing day in and out. And I feel that, like, waking up 10 years from now, like going to work and doing what I'm already doing right now is like, whew, my brain hurts thinking about that. So
yeah. Well, 65 is coming either way, so you can either set aside for it or not. Exactly. I definitely recommend you do, but it can definitely be a challenge, seeing that day in and day out. You have to have a long-term mindset. Yeah. You have to have that marathon mindset I talked about earlier. This isn't going to happen overnight, I'm always wary of get-rich-quick schemes. Some people are extremely fortunate or maybe blessed with a little bit more intellect than the average guy, and they can see things. But most people that go down the road of trying to accumulate money extremely quickly, I mean, you look at the stats for day traders, it's not good. I think it's in the high 60 or even 70 percentile lose money every year day trading, And that's not to be, say it can't be done. Obviously, there's 30% of people doing very well, and I applaud them, but I don't necessarily advise that tactic for most people, because it's simply not a, reality that it's going to happen for them statistically.
Yeah, and that's something that I think a self-awareness of what you're trying to accomplish and what you're perceiving at that moment is important to make aware of. If you feel the dollar signs rolling through your eyes and other people tell you that, then you need to be cautious at that moment and think like, well, am I thinking of this the right way?
Yeah, investing always has to be more than just about the money. It can't just be, I want $1 million, because $1 million's never going to be enough. Then you're going to want 5 million, then 10 million. And then you get the end of your life, you've accumulated all this wealth, and what was it for? You know, you have to have a bigger picture. There has to be a vision behind that, and money is not everything. It's not the most important thing in life, but it can create memories. It can create, value for other people. You have to view money like a tool, and that's very important.
Yeah. And I think, wrapping up that section regarding reasons to invest, you really need to sit down and evaluate that. Yeah. So now, as far as like the simplicity of it and how we didn't go through some of the words like regarding compounding interest or things like that, but can you speak to some of, we've mentioned how easy it is to do with technology, but
so in this day and age, anybody, especially if you're 18 or older, and even if you're not, if you're younger and hey, I want to invest, you can get a custodial account with your parent as a co-signee on it, and you can be kind of co-owners of that account, if you will. But there's so many online brokerages that are free to use, and it used to be they would charge you to buy stock and sell stock. Well, enter Robinhood. They disrupted that market. They said, hey, we're going to give our users free trades. Well, a lot of the big guys e-trade. I think they're one of the original, they call themselves the original place to invest online. Fidelity, TD Ameritrade. I believe most, if not all of these guys are now offering free trades. So when you buy stock or when you sell stock, it doesn't even cost you any money. And you can simply go to one of these websites, open an account. It's going to take probably less than 15 to 30 minutes. They might want some personal information. That's completely normal. So if you have that available, then all you have to do is link your checking account to it, and you can make transfers between those two accounts that are fairly quick, and typically once you move money from your checking account into your brokerage account or your investing account, you can almost deploy that money into the stock market immediately. So it's very simple. Also, if you're just not comfortable doing that at all and be like, hey, I don't want to manage my own account, I don't want to, just go to your local bank, maybe one that your mom and dad used and had, good service with, and just ask to talk to a financial advisor. Explain to them your position. Tell them, hey, here's some of my goals. I'd like to start saving. There's professionals that'll sit down and help you, and you want to find someone that actually cares about you, because they sometimes do get paid commissions to sell certain services. So you want to avoid somebody that's looking out for their best interest. Find someone that actually seems to care about you. There's really no excuse in this day and age to not have a way to invest your money. It's not like it used to be where you had to call your stockbroker up on the New York Stock Exchange, and then they would place an order, and then they might even mail you, certificates of your shares of stock. You can do it in the click of a button. I've purchased stock, on a random weekday. You just place the order, put in the price you want to buy it at. If it's trading around that level, there's a good chance you'll get it. Put how many shares you would like. It'll tell you what it's going to cost. Boom, boom, boom. You're a shareholder, just like that. It's not real complex.
I think it's very important to probably just address this briefly when we regard some of the people in the financial space. Yeah. A lot of talking heads, a lot of people who are important. Dave Ramsey is one that comes up, and I think he advocates for the method that I've heard from other people of paying yourself first. Obviously, like if you're a Christian, you give to your church first, and then right off the top, and then right after that, you need to pay yourself first. We look at all these four walls of you need to like have your shelter, your mortgage, your clothing, your food, your important things. But if you're not saving or having some kind of, I think he almost advocates for an automatic withdrawal, something at the beginning that happens. Because at the end of the day, if you spend all that money first, then you're always going to come to the end of the month and be like, I don't have any money to invest.
There's never going to be enough left over. And you speak to giving. I've learned this about people. People always say, if I was rich, I would give more money. To be frank, I don't believe that. I think people that are giving regardless. We speak of scripture, we look at the widow who gave all she had, and that's a heart issue. So if you're not going to give with a $40,000 income, what makes you think you're going to give off a $400,000 income? You're going to be more likely just to spend that very similar to the way you do now. It's just going to look differently in terms of what you're purchasing. Investing is no different. You do have to have that, first. Pay yourself first. You give first. You do the right thing with your money first, and then you take care of, some of your entertainment and that type of thing later. But, with Dave Ramsey, he's obviously been kind of a focal point for finance for a long time, and he's helped a lot of people get, out of debt, get their finances on track, and start investing. And I think in his program, it's baby step 4. You start putting 15% of your income into retirement after you have paid off all of your debt except the house, and then saved up enough in emergency funds to where you can cover, basic emergencies, that come up. But you do have to prioritize it, because if you wait until after you've done everything else, there's simply not going to be enough money for you to justify putting into the stock market. It has to be something you prioritize and get done alongside giving. You need to be a giving person. And, you read these books of people that were the most giving people. It always came back, and they were rewarded for that. But you have to have that priority mindset of, this is important. It's more important than going bowling. It's more important than going to Texas Roadhouse, because there's going to come a time, You look at the COVID-19 crisis, a lot of people lost their jobs, Chad. I mean, and that's no small thing. Had they been setting aside money for the past 10 years and investing it and growing it, that could have looked very different between being comfortable in a time of crisis and being, on the brink of despair.
Yeah. I think that's a really good point to make, because we're seeing that right now, economic fallout to some degree, especially for individuals, and they're realizing, like the choices I made, which obviously we can have a whole nother conversation about.
Sure.
Some people don't acknowledge their own choices in the matter, and there's reliance.
There's always a choice, and it is. I admit that it's tougher for certain people. Not everybody is born with the exact same opportunities. Not everybody is born with the same privilege, but the access today is greater than it's ever been. And you hear a lot of negativity about, this, that, and the other. And some of that's very valid. But if you constantly listen to that, it's just going to fester and pick at you. And you're never going to do anything, because you're going to think, hey, the system's out against the small guy. I can't do anything. Well, with that mindset, you're right.
Yeah.
But if you say, you know what, I'm not going to let anybody tell me that I can't succeed, that I can't do it because of who I am, what I look like, or my background, you're going to be successful because you're going to attack this thing the right way.
I do notice that there are differences in the types of people in the world, which in a last week's episode, we talked about the Enneagram, personality tests. I'm speaking outside of that, more of your mindset on whether or not you view that you can shape your life, or whether or not you're subject to life. I think that plays greatly into all aspects, and investing as well.
What's the old saying? I think it's life is, 20% what happens to you and 80% how you react to it, or something.
I thought you were going to say like a box of chocolates.
Oh, yeah. Hey, that's true. You never know what you're going to get. But no, there's some truth to that. There's people that have just had tragic life circumstances, but they have risen above that and transcended that. And then there's people that have either had tragic or maybe not even just the best of circumstances, and they have just wallowed in that suffering and chosen not to move on and move ahead. And this isn't just limited to the financial realm, but certainly it can apply.
Yes. Yeah, exactly. So when we get to this part of it, we've already started talking about, there are objections. There are things there are obstacles in your way that stop you from accomplishing some of these things. And like I said, there's some perspective to that from each individual, but also Dave Ramsey talks about this. When you go to pay down debt, you start with your small thing. And I think you even brought up recently something you started, a small thing, paying down on something, or when you invest, you get excited about a small bit, making a bit of progress, and then that snowballs and compounds.
Yeah.
But regarding some of the objections, even starting out is difficult. Like I know in my case, like we're trying to do stuff, and and I'm sure a lot of other listeners out there, like you go and you try to save up an emergency fund, and once you get anywhere close, something happens. Your car breaks down, you have to replace a whole vehicle, and then you're gone. Like you start over, and you didn't get to investing yet. Or you save up, and like we're going to have a baby in a few months, and you got to save up for that. That costs a lot of money. And this new year now, health insurance is all the health insurance for us doubled. And it's all these little things add up. So what do you say, like regarding some of these things, like, I don't know, what do you say about things like that?
Well, getting started is the hardest part of any project. When my wife says, hey, I would like you to go do this, I'm like, I don't want to go do this. I don't want to start that. Once I get into it, I find that it, isn't as bad as I thought. And sometimes I run into some problems, but then, hey, that's just another challenge to overcome. So the first thing I say in terms of obviously have an emergency fund set aside to take care of any, big expense that comes up. But in terms of investing, just start. Open an online brokerage account if you don't want to use a financial advisor. Put a little bit of money in there. There's certain funds that you can invest in that don't even require a minimum. Some of them you do have to have $1,000 to $2,000 to even start, but one I'll talk about later, it's a Vanguard ETF, which is an exchange-traded fund, which simply reflects a stock index. And in this case, it's what most people have probably at least heard of called the S&P 500. There's 500 different stocks on that, exchange. They're fairly well known. I mean, you would know most of them. Big news, Tesla, congrats to them, just got added to the S&P 500. But, you've got some of the biggest companies in the world. You can just invest in that. And that, I think it's VOO is the ticker. A ticker is simply an abbreviation for how a stock is traded on a stock exchange. It's less than $400 right now. You could put $350 into that, and that's a start. And then, you build and you add to that. And it's not unrealistic to think that most people might be able to put $1,000 into that index. And since the S&P 500 was founded in 1926, it's estimated to return 10 to 11% to its shareholders when you factor in dividends. Dividends are simply, a company that returns a share of its profit to a shareholder. So they'll just give you either a quarterly or sometimes biannually, some money back just for owning the stock. So that's a pretty safe track record. $350 and you can start on a path. And yeah, there's going to be some fluctuation. There's going to be some ups and downs. It might go down from when you bought it. Don't worry about that. Just know that you own the asset and hold on to it and add to it. 20, 30 years from now, the likelihood that it's going to be much higher. We have 100 years nearly of history to prove that it's going to return, a good amount of capital to you.
Yeah, I think that's really important to know that. As some of the joking online goes, stonks go up, and I think is the colloquial term. And there's some truth to that. We do have a good bit of history. But regarding if you're in like a pickle and you don't have a lot of funds, things keep breaking down, you're trying to work. There are things to be said for cutting out certain expenses.
Oh, absolutely,
There's
Chad.
definitely something to be said for finding side hustles. Like I know there's a really popular thing online right now regarding couch flipping. It's very easy to do, and it takes a little bit more time effort. There's a bit of that we can talk about self-gratification or putting instant gratification, putting aside the desire to like watch TV for that evening, go find a way to make a little money, or even I was going somewhere else with that, but I can't remember at the moment.
To your point, though, I've got a friend. He's up in the Chicago area. Smart guy, hustler, and he is flipping ATVs right now, or, four-wheelers, and he recently purchased one, and I think got it for less than $1,000. Put some new paint on it, fixed some of the cracks up, got it looking nice. Listed it and sold it, I think, in the $1,600 to $1,800 range. I think, he may have had $100 in parts into it, plus a little bit of his time. But I want to say he was, $700 to $800 profit on that. So you can do things like that. Now, maybe you don't have that exact skill, but there's other ways you can find to increase your income to have to invest. And even bigger than that, you need to go through your finances with a fine-tooth comb and see where you are overspending. Everybody prioritizes what is important to them. My wife and I, we're small people, but we still feel entitled to a king-size bed. We just sleep better that way. And I remember one time somebody said to us, how can you guys afford a king-size bed? And at the time, we didn't have a big screen TV. We've been fortunate enough to procure one since then, but they had a big screen TV. And, we got to talking about it afterwards, just saying, they have what was important to them, which is entertainment. What was important to us was having some space when we slept at night, so we got a good night's sleep. So I would imagine that the cost difference between those two items was not astronomical, but one was more important to us and one was more important to them. You can find things in your budget that you're spending too much on. You don't have to have every streaming service. You don't have to buy the name brand food product. You can get a great value or something like that. You don't have to have the nicest, fanciest car to impress people. You can get something more modest, like a, older model Honda Civic or Accord or a Camry, something that's known to be reliable. You can find places you're overspending. And once again, it's not as much as people think that they have to start investing. You can do this, with limited money to start, and you'll be surprised how quickly it starts to build in the years to come.
Exactly. And I think regarding all of these issues, reasons or objections to investing, Dave Ramsey basically puts it out as it's less of numbers and it's more behavior. And that's the hardest thing. Just cutting out, we don't have any of the streaming services. But regarding like income things, then you now look at another point that I think Dave Ramsey and I advocate for, and others online will say that there is a limit, obviously, to what you can cut out. And if you feel like you've hit that limit or you stressed at that point, then you may need to go increase your income. And that's definitely doable. Like, it's not going to be tomorrow, suddenly I'm going to be moving from $30,000 a year to $60,000 a year. But it might be something that you can look around and decide what is an interest or what pays more in something, and work towards that self-improvement, as they say. investing in yourself is probably one of the biggest assets that you can even do financially, but also for happiness and for being able to give to others. It affects a lot of areas.
People underestimate their own value, and people are so valuable, and I wish they were told that more often. But you have value as an individual, and don't ever undersell yourself on that, whether it's from an emotional point of view or a financial point of view. Don't let anybody tell you that you're not worth X amount of money, because you can be worth it. Now, maybe you're not right now. Maybe you've got some work to do, but a lot of the great American success stories were average guys that went and made it happen, and they ignored the haters and the naysayers. You will always, and we can get more into this, but you're always going to have people tell you can't do it or that you're doing the wrong thing. You have to learn to trust yourself and not listen to every negative comment, and surround yourself with positive people that are going to fuel what you're doing. And of course, a good friend's always going to tell you when you're off base or when you're doing something wrong. But when you're talking about protecting your financial future and providing security for your family, that's an important thing. So don't let anybody tell you that you're doing it wrong or it's unimportant. If you're following what you feel to be as a proven system, that has historically worked.
Yeah, there's a lot to say regarding putting people in your life and being around those. I think you even told me at one point that there was some statistical analysis that showed that like your income or wealth is the average of those you hang out with.
Yeah, you basically, I've heard that the top 5 people you associate with most, your income is going to be the average of those 5 people, and the same can be said for your emotional and your mental health. You become, a lot of times what environment you place yourself in. And if you take a really hardworking guy and put him with a bunch of slugs, there's a good chance that if he can't rise above that, he's actually not going to raise the tide, but he's going to be dragged down. But when you take a team of people that are high performers and they all want to achieve, and you put them together and let them collaborate, they're going to become the best of each other. So positivity is huge in investing, because it beats you down. It takes a long time. You need to be regularly encouraged. You need to be regularly telling yourself, hey, you're doing the right thing. It stinks now. I'm not enjoying it now. I wish I was out with the guys getting a burger, but I'm at home working and not spending that money. And that's not to say you can never go do anything fun like that. Yeah. I think you should. There's a balance to this, as there is with all things in life. But, you definitely have to have healthy relationships and people that encourage you. And, my wife is kind of what I call my white knight. She cheers me on, and for her, it's not as big of a hobby, but she'll ask me, hey, how's our dividends doing? Or, what's the stock market up to? And she knows that I care about that, so it's important to her. So having somebody like that to back me up makes me feel better about it and stay more proactive with it.
I think that's something important to speak to regarding like with you and your wife. A lot of people, I believe, in being married might find that one of you is more interested in, I would probably venture to guess that more likely that the guy is more interested in doing stocks and investing and things like that, probably more often. I don't know.
I'm not sure of the statistics. Sometimes females are the better financial managers in terms of the budget, and sometimes the guys, from what I just see on YouTube, there's a lot of male-dominated, YouTube channels, but there are a lot of females as well that are becoming more interested in the stock market, and I think that's a great thing, that we are breaking down some of those stereotypes. Yeah. And hey, this is for everybody. Investing in the stock market, it's not for the elites on Wall Street. It's for the stay-at-home mom. It's for the the dad that works 40 hours a week, and maybe he doesn't have the greatest career, but it's for that guy. This is for anybody that is interested in growing their wealth, and it doesn't have to be, like I said, $1 million, but you can start with not that much. And but once again, in our case, at my house, it's definitely I'm the guy that is interested in what's going on in the market, and my wife, to her credit, is sometimes more concerned with the simpler things of life, and that's a good thing as well.
Hey, you need both people in the world.
Yeah, absolutely.
And you're married, you need both people. So
absolutely.
Now, do you have any other regarding or other thoughts regarding investing or other things that you wanted to?
I mean, if you want to talk about just some of the reasons people don't invest, there's a little bit more there. I think that a lot of people think that they have time on their side. That's retirement's a long ways away. How old are you, Chad?
Something 30 something.
He does round numbers. So that 30 years went fast.
Yeah, and
so
to me, I perceive that I'm like halfway to dead, even though I know I'm not like die at 60.
Certainly not dead. I hope not. No, but let's say the next, say you're 30. I'm going to round you down.
Thank you.
You're an even 30 years old. I'm coming up on 30 next year in 2021. Let's say the Lord blesses and you have a good, life. That next 30 years is going to go quickly. Mm-hmm. You've already lived it once. You don't have time. You need to start now. Mm-hmm. Another thing people say is the stock market is scary and it's risky. Mm-hmm. I would pose that it is riskier not to invest than to invest. It's risky if you just go in blindly, not knowing what you're doing. But once again, investing in an S&P 500 index fund, there's very low risk, unless you need the money right away. Don't go put your money at risk because there will be, some short-term losses at some point. But if you're looking over a 30-year period, the likelihood of it appreciating is very high. People say, well, what if the entire stock market crashes, and it's total mayhem and you've lost everything? I say, if that happened, then my dollar's not worth anything anyway, so I might as well lost it investing in something I believed in, instead of just having, a bunch of bean bags around my house, But, I'm a big believer in America. Likely that we'll be here forever, probably not. But while we're here, I think we've created a great thing, where average people can invest their money and grow it. It doesn't have to be as risky as you think. It's not as scary as you think. You just have to get started, put a little bit out there, don't dump your life savings into it, but start to build it slowly, and pick a strategy that works for you and stick with it. Don't change every 5 minutes. Consistency and time is the big thing here. They'll always say time in the market beats timing the market. I'm always buying stock. I try to get it what I call on discount. When a stock price drops, to me it's like when my wife gets a 15% off coupon at Kohl's. I view that as a good thing. Hey, I can buy this on discount and have it cheaper. But don't wait. The best time to plant a tree is always yesterday. In American history, we're always, to some extent, in a time of crisis. In our lives alone, we've gone through so much. A little bit with the maybe Iran-Contra affair. If you were alive during, we were very young at that time. I actually was just a thought. We had 9/11. We had the recession of 2009, 2008, with the housing crisis. Now we're living in the midst of a pandemic and a questionable transition of power. If you wait until X is over or until Y is over, you'll never invest your money. If you would have invested at the peak of the market, I was told this by a financial advisor recently, in the 2008, 2009, before the crash, and you would have put money in at the peak, by now, even though you had that huge crash, you would be about 3 times up on your investment, even though you invested at the high end. So the stock market's too high. It's gone higher before than people think it's ever going to go. It goes lower than people think it can. But the average and the law of averages show, at least with the S&P 500, that the returns are there. Don't wait. Get started. Put some money in it and start building on it and write down some goals for yourself of where you'd like to be. I think you'd be surprised by how much you can accumulate in not too terribly long a time.
Yeah, and I think there's a connection point there between investing in stock markets and also houses. When you look at ups and downs, you don't lose anything until you sell.
Yeah.
Unless your company goes out or your house burns down, you don't really lose anything. You may be underwater and your house is worth less than what your mortgage was or something like that, but your crisis doesn't come until you when you sell. Yeah, then you've lost something. But if you wait it out, like you were saying, like it's inevitable, it's going to come up, or if your money is completely worthless, you have other problems to worry about.
Right. And that's why I don't advise, for new people picking single stocks, because you just don't necessarily know what you're getting into. Pick an index that's been around a long time, and the likelihood that your money's going to zero is extremely low. And if it does, like I said, we got bigger problems than that to worry about. But there's always, that aspect of, risk. People need to be aware of that when they do invest their money, but they also need to be aware of the risk of not investing their money. And what does it look like in 30 years if you haven't dropped a single penny, into any sort of, market that can appreciate your capital?
Yeah. And I think you mentioned earlier, VOO, one that I look at a lot, we have some money in, is VTSAX.
Sure.
And that's, to me, like you're saying, you can invest in a single stock, but why not invest in America? And if you pick one of these larger mutual funds where we mutually come together to fund something, you can hit some of these that have it.
Yeah. And you do a lot for yourself when you do that. You reduce your risk because you're diversified, and you do want some diversification. There's certain people in the world, that may just want to be in a single market or segment of the market, but that's going to be the minority. I would highly recommend for most people investing in a mutual fund, which is a diversified fund of, pooled investors' money that typically goes up over time. So, staying invested in a fund like that is very conservative and, in my estimation, a very wise move for your money.
Yeah, that's really good. So, well, I don't have anything else unless you did.
This is great. I hope that our viewers got some, or your viewers, I should say, got some value out of this. If you guys have any questions, drop it in the comments. Like I said, I'm not a licensed financial advisor, but this is a strong hobby of mine. I've been investing money since I was 15 years old. I have had some success. I'm very, very proud of the work I've put in and the support my wife's given me, and what we've been able to do setting up for our future and helping other people. It's a journey that I wish more people would go on, and I hope to see you there as well. And, definitely very much appreciate you having me on the podcast. Love discussing this type of thing.
Hey, well, maybe we'll get some comments, feedback, and maybe we can discuss more related to this, go in depth on whether it be terminology, types of investments, or whatever it might be. So make sure you comment, like, and subscribe. I always appreciate it. And anytime you share this podcast, I obviously, I'm not doing this for a living. I don't make money doing this at this moment. I'd love to. But it takes you liking it, you sharing it, commenting, subscribing. Those things don't cost you anything. But they greatly help me, and I appreciate that. And I can always I have many friends like Chris who have great skills, great knowledge about particular topics. And I like to get more of them on this show and just help you. I want to help my other friends and who
just
don't get
a small way you can invest in Chad.
Exactly. Help invest in me, and I will help invest in you, and I'll bring my awesome friends on the show, because I know not everybody here lives in Greenville, so you can't all be buddy with Chris and glean from the source of information that I have here. So, well, thanks for coming on the show, Chris.
Let's go buy some stocks.
Sounds good. Let's do it.
Take care.